Concentrate people. Now we'll be starting with PYP discussion of marginal costing. Okay. Shall we start? Look at the first question. Following figures have been extracted from the books of measure RST Private Limited. They have given 2 years, 2 sales, 2 profit. If you see this question, don't you think this is the same practical question where one we got negative profit of, loss of 40,000, one more profit of 80,000. Yes, that is PV ratio. What is the formula? Change in profit divided by change in sales. Change in profit here is 30,000, that is 15,000 minus 15,000, whereas change in sales is 1 lakh. So PV ratio, it will be 30%. 30,000 divided by 1 lakh into 100. See here, of course, I won't be going that slow. Okay, we'll be going bit fast only because all these concepts are already seen once. We are just revising kind of stuff. It is next up. Fixed cost. We know that some sales we can take. We'll take the second sales. Okay, 5 lakh. Guys, if the 5 lakh is sales, then the contribution of the second year is how much? 1,50,000. From that we reduce fixed cost so that we got 15,000 as profit. Moral of the story, our fixed cost was 1,35,000. 1,35,000. Hope you understood this also. Break even point. We know that at break even point, if you have doubt, just mark it down. So after completion of everything, we'll discuss. Now, break even point. Break even point means people, contribution at break even point is equal to fixed cost. Now, break even point, I will take it as BP only. Contribution will be 0.3. That is equal to fixed cost of 135,000. So, break even point is 135,000 divided by 0.3, which will come to 4,50,000. Sales required to make the profit of 45,000. Let that sales be X. Then your contribution at that sales be 0.3x. Correct? From that, if we reduce 135,000, we should get 45,000. That is total 180,000. X is equal to 180,000 divided by 0.3 rupees. Okay. Next, they are asking MOS. Try to understand 2017 sales we know. Fixed cost is not changing in both the years. PV ratio is not changing, which means break even also will remain same for both the years. We already computed break even as 450. We know the sales as 5 lakh. So that will come to 17, 18. 17, 18. I already told you, no, unless and until for the sub questions they ask you to create a link. Don't go to the main question. Take the data from main question. Don't take numbers from the sub question. Unless and until they tell, consider 0.2, 0.3 answer. Shall we go to the second one? Shall we? There is one manufacturing company which manufactures ready-made suits. It has annual production capacity of 2,000 pieces and following information is given. Sales they have given 1,500 pieces at the rate of 1,800. Direct material, direct labor, overhead is also there. In that 40% is fixed, 60% is variable. Guys, may I know how much is fixed in this? 4,78,800. Okay. And how much is variable in this? 5,74,000. 7,18,200. That is your variable. Guys, can you tell me the total variable here? See, you have to show different things in examination. But as we are discussing, I am just going to show you roughly here. How much is your variable cost? 5,94,000 material, 4,42,600 labor, 7,18,200 overhead. Total variable cost 17 lakh. That is for how many units? 1,500 units. Per unit how much people? 1170. 1170 will be my variable cost per unit. Correct? Okay. Fixed cost is 478,800. First one they are asking. If the selling price is increased by 200, right now it is 1,800. So what if it becomes 2,000? The sales will come down to 60% of the total annual capacity people. Not the right now present sales, sales of annual capacity. Annual capacity is 2,000. 60% of it is 1,200 pieces. 1,200 pieces. Should the company increase its selling price? We have to check whether right now we are making profit of 466,300. If our profit becomes more than this, we'll go for it. Otherwise, we'll not go for it. How much units of sales they are telling? 1,200. Selling price will be 2,000. How much would be our sales people? 24 lakhs. Variable cost, I already told you, along with selling price, will the variable cost increase or decrease? No. Along with sales, units only variable cost will change. Variable cost per unit won't change with change in selling price, which means that remains same as 1170. For how many units? 1,200 units. 14 lakh 4,000. Now may I know how much is our contribution here? 9,96,000. And here the best part is we know the fixed cost. How much is the fixed cost here? 4,78,800. Guys, that will give you profit. 5,17,000. Hope it is clear. So earlier my sales was 466,300 profit. Now it is 5,17,200. You only tell me, should we go for it or no? Go for it. Company should increase its selling price. Second one, shall we see? The company can earn a profit of 20% on sales if the company provide type-in with the ready-made suit. Okay. Now, profit of 20% could be earned, it seems, on sales if they provide type-in along with the suit. And the type-in cost is 18. That is add-on cost to whatever is there right now. Calculate the sales to earn a profit of 20% on sales. Can I take my sales as X people? Hello? Okay. Or first we'll find out units, or shall we directly find out sales amount? We'll find out units. Reason being we haven't calculated PV ratio, no? Otherwise directly from contribution we should have started. But anyhow, selling price will be how much people? Don't take 2,000. I repeat again. 2,000 is point number 1. Point number 2, whether they are telling to link it somewhere, then which one you should take? 1,800. Shall I tell number of units to be sold as yes? Variable cost will be not 1170 people. Instead, it is 1170 plus 18. 1188. Yes will be your variable cost. How much will be your contribution? 612. Yes. From that we are going to reduce fixed cost of 478,800. That should give us profit of 20% on sale. 1,800 into 20%, 360. Yes. Got it? Now 612s minus 478,800 is equal to 360s. Therefore, S is equal to how much people? 1900 units, which means how much sales to be made? 1900 units to be sold at the rate of 1800. So how much is the sales? 34 lakh 20,000. Anyone, any doubt in this particular thing? Any doubts? Okay. So the sales which we were supposed to make is 34 lakh 20,000 in amount, 1900 in units. Hope it is clear. Shall we? 1800 they have given, no sir, here sales. We are going to take that one. Shall we go to the third one, people? Yes, a manufacturing company is producing a product A which is sold in the market at rupees 45 per unit. So the company has the capacity to produce 40,000 units where budgeted was 30,000. So your normal capacity is 30,000. The cost of each unit expected is material, wages, overhead. Now overhead might be consisting of your fixed and variable or only variable. That we have to check. How can we check, sir? We will get to know. Now MOS is 4,12,500. Now listen, guys, if at all you treat it as a total cost, how much will be the total cost per unit? 27 na? Now for 30,000 units, sales will be how much? 8 lakh? Okay sir, thank you. 13 lakh 50,000. Variable cost would be, guys, 30,000 into 27. If at all, sorry, not variable, total cost 8 lakh. That means if you treat it as total sales, if you treat it as total cost, that will give you profit of 5 lakh. Guys, can profit be more than margin of safety? Can profit be more than margin of safety? Moral of the story, what they have given is not profit, or what they have given is not fixed total cost. What they have given is just variable cost, because contribution of margin of safety itself is profit. You know that contribution cannot go more than 100%. Why? 100% means they are giving you material plus they are giving you money. Variable cost is negative. Then only your contribution will be more than sales. Then only your PV ratio will come, no, more than 100. You are giving material also. For buying material labor, they are giving you money also. That is not going to happen in business. That is dowry system, no. Take product also, take money also. Correct, no one? Now, try to understand, that is your variable cost. So 5,40,000 what you got, no? That is your contribution at 30,000. At 30,000, which means I know the selling price, I know the contribution. May I know the contribution per unit, please? 18. How much is PV ratio? 18 divided by 45 into 100. Okay. Now they are asking you fixed cost and break even point. Very simple. Fixed cost. Using the data here, you know the margin of safety. You know the margin of safety. If you know the margin of safety, what we can do to ascertain the break even sales here. Sales minus margin of safety will give you break even. Break even. How much is the break even sales then? If the sales is 1350, margin of safety is 4,12,500. How much should be your break even sales? 9,37,000. Guys, you know the break even point. You know that at break even point, contribution is equal to 9,37,500 into 40% will give you contribution. That itself will be the fixed cost. How much? Sorry?
3,75,000.
So your fixed cost is 3,75,000. Calculate the volume of sales to earn profit of 20% on sales. They are asking what should be the sales volume to earn profit of 20% of sales. Shall I take that sales as X? Yes. Shall I erase this? You know the numbers, right? You remember the numbers? PV ratio 40%. Remember that one. Enough. PV ratio how much? Now, if at all the sales to achieve, if I take it as yes, contribution will be 0.4s. Fixed cost is 3,75,000. That should give you profit of 20% on sale. If the sale is yes, 20% of sale will be 0.2s. So S is equal to how much, people? 0.2s is equal to 375,000. S is equal to 375,000 divided by 0.2. 18 lakh. That is in terms of amount. If they want it in terms of unit, divide it by 45 rupees selling price. You will get it in terms of units. $667 units. Done. Hope this point is clear. If management is willing to invest rupees 10 lakh with an expected return of 20%, calculate units to be sold to earn this profit, which means they want a profit of 2 lakh. They want a profit of 2 lakh. Shall I take my sales as yes? In fact, they are asking units to be sold. I will take my sales as 45s. I know the selling price, no? Can I take the contribution directly as 18s here? 18s minus 3,75,000 should give you 2 lakh. Now, S is equal to 5,75,000 divided by 18. 21,000? 31,945 units. You have to sell 31,945 units to satisfy the management profit. Next, management expects additional sales if the selling price is reduced to 44, not by people, which means new selling price will be 44. Calculate units to be achieved to get the profit as desired by point number 3, which means 2 lakh rupees. Now, my selling price will be 44. Variable cost, will it change? It will be 27 only, no? Which means per unit how much? 17. Can I tell my contribution will be 17s minus my fixed cost would be 3 lakh. 75,000 should give me 2 lakh profit. Therefore, S is equal to people 5,75,000 divided by 17. 33,000. Hope it is clear. Hope it is clear. For this 10 marks they have given. 10 marks, try to understand. If at all first point goes wrong, Old 10 marks will be Jai, 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 Jai. Got it? Shall we go to the next one? Measure, mark it as LMR, fourth one, and concentrate. Measure, Gaurav Limited is manufacturing. Measure, Gaurav Limited is manufacturing and selling two products. Which are those two products? Black, white. At a selling price of 20 and 30 respectively. Selling price of black is 20. Selling price of white is 30. The following sales strategy has been outlined for the financial year 1920. Sales planned for the year 81 lakh for black, 54 lakh for white. Selling price of the black will be reduced by 10%. So right now it was 20. So the new planned selling price will be 18. And white by 20%. Right now it is 30. New it will be 24. New it will be 24. Done. Break even is planned at 70% of total sale of each product. Okay. Profit for the year is to be maintained is 8,26,200 in case of black, 7,45,200 in case of white. This would be possible by reducing the present annual fixed cost of 42 lakh allocated as 22 to black, 20 to white. They are asking first one, number of units to be sold of black and white to break even during the financial year, amount of reduction in the fixed cost product wise to achieve desired profit mentioned above. Go through the question, guys. We'll start. Go through this. We'll start. See, this is why you should not show the attendance only. 4 are remaining. Nice. I am doing this as a part of this particular chapter only. Decision making questions are not much there in ICA material. But in examination, decision making questions only. Now you can see slowly the questions from 2018 comparing to that. Now slowly they are more of, application based. Going forward, you will see much more that kind of questions. So whoever leaves at 8, just make sure to go and watch the recording for that 35-45 minutes, whatever it is. Okay. Now, I hope you guys are watching. Now listen. First one is so very simple, guys. What they are telling? Break even point units. Correct? Correct? No? Now, sales they have already given. Black is there. White is there. Guys, sales though they have already given. How much they are telling? Sales of black. White, how much they are telling? Okay. Now listen. Also here the best part is they are telling break even point will be achieved at 70% of sales. Peace. Break even sale. 70% of sale. How much? 56 lakh, 70,000. 37 lakh. Listen, but here they didn't ask you to multiply and give. You are not LKG kids. They are expecting you to find out a break even units. Selling price is a new selling price 18 and 24. So 56 lakh 70,000 divided by 18. 3 lakh. 37 lakh 80,000 divided by 24. 1,57,000. Is that clear? See here, second one is crazy. What amount of fixed cost product wise to achieve desired profit mentioned at 4 above? That is, they want us to make the profit of 826 200 and 745 200. No. What should be the fixed cost reduction they are asking? You can't take the fixed cost what is there right now. It is getting reduced. Then what we should do? Guess. By whatever the data given here, max to max what we can find out. Fixed cost, you know. PV ratio, how to find out? Here the PV will change. The old PV won't remain because our selling price is falling, no. So old PV won't remain. So what we can do? Use your brains. Come on. You're almost there. Okay.
Based on this, we can calculate the sale.
Very simple. You don't have to go till there and all. Guys, can you find out MOS here? MOS could be found out easily because if 70% is BES, MOS should be 30%, no? Now, in the 81 lakh, you know that break-even sale is 56 lakh 70,000. So, margin of safety should be how much for the first one? 24 lakh 30,000. Second one. Sorry? 16 lakh 20,000. Okay, sir, MOS you found out. Then what? A. Very good. You know the profit, people. You know the profit. How much? How much is desired profit? 8 lakh? Okay. 7 lakh? 45,200. Is that clear? Now, you know MOS, you know profit. Can't you find out PV ratio? That is, profit by PV ratio is MOS, which means profit by MOS is PV ratio. See, profit by PV ratio is MOS. Can I write it as profit is equal to MOS into PV ratio? Can I write PV ratio is equal to profit by MOS? First one? Okay. 46. Now, we know the PV ratio. We know the break-even sales. Fixed cost, can't we find it out? Contribution at break-even is equal to fixed cost. 56 lakh 70,000 into 34%. 19 lakh 27,800 for one. Next one 17 lakh 38,800. This will be your new fixed cost. Mark it as LMR. Try to solve once again in home. Okay. But here best part is what you know. Listen. They are not asking you new fixed cost. They are asking you amount of reduction of fixed cost. A. Amount of reduction of fixed cost. What do you mean by that, sir? Old fixed cost was how much? Now it is 19 lakh 27,800. How much is saving? Second one, old 20 lakhs. Now how much? 17 lakh 38,800. How much is savings? Hope it is clear. Hope it is clear. Paka. Peace. Next. Sorry? Photo no. How? See, total sales minus break-even sales is MOS. So we found MOS that way. Profit is nothing but profit divided by PV ratio is MOS, and profit is already given in the question, desired profit. That we took. So PV ratio is nothing but profit by MOS we did. Got it? Shall we go to the fifth one, people? Shall we go to the fifth one? Mark it as LMR. I know it looks small, but bit different. Not bit different, I mean, not much to, like mark it as LMR, but still LMR. Listen. When volume is 4000 units, average cost is 3.75. Can I tell when volume is 4000, my total cost is 3.75 into 4000? 15,000. Now, when the volume is 5000, average cost is 3.5. Break-even point is 6000. Let it be. Now listen. Can I tell here my cost of 2500 is increasing because I am producing 1000 extra units. Can I call it as a variable cost here? Change in cost divided by change in output will give you variable cost per unit, which is rupees 2.5. Yes? Okay. Variable cost per unit, we found out 2.5. To find out fixed cost, we can apply it to level 1 or level 2. For which one shall we apply? Level 1. Okay. 4000 into 2.5 is variable cost, 10,000. But the total cost is 15,000. Moral of the story, the other 5,000 is. Got it? Now, they are asking break-even point. They are asking break-even point. Sorry, they are asking PV ratio, but they have given break-even point. Can I tell at break-even point, contribution is equal to break-even point, we know 6000 units. Contribution, shall I take it as X? That gives you 5. So X is how much, guys? Rupees 0.83333. Rupees, not percentage. Yay. Rupees, because units. Units, rupees. Amount, percentage, PV ratio. Now, guys, you got to know how much is contribution. You know variable cost also. Can I tell sales minus variable cost is equal to contribution? Sales is equal to contribution plus variable cost. Can I tell my selling price will be 2.5 variable cost plus contribution 0.8333, 3.33. My contribution is 0.833. Selling price is 3.333 into 100 will give you how many percentage PV ratio? 25%. Understood? Contribution is 0.833. Selling price is 3.333333 into 100. You will get a PV ratio. Hope it was clear. Shall we see the next question? PJ Limited manufactures hockey stick. They are the manufacturers of hockey stick. It sells a product at rupees 500 each. So the selling price is 500, makes a profit of 125. Which means, guys, now how much is the cost for them? 375. Listen, this is total cost, not variable cost. The company is producing 5000 sticks annually by using 50% of its machinery capacity, which means the machinery capacity is 10,000 units. Now, the cost of each stick is as under: direct material 150 people, direct wages 50, works overhead 125, in that 50% is fixed, it seems. How much is that 50% of 125? Which means other 62.5 is variable. Selling overhead 25% is variable. How much is fixed then? 75%. How much it is? 37.5. Now listen. Can I tell my fixed cost per stick was 100? Yes, but I have to multiply with the level for which we computed it. Because per unit we computed for 5000 only, no. Fixed cost will change per unit. So 5000 into rupees 100. Sorry. So my fixed cost came to 5 lakh. Variable cost how much, sir? 150 material, 50 direct wages, 200 plus 62.5 works overhead plus here 12.5. Total 275. You can see here in this 375, 100 is fixed cost, which means 275 should be variable cost. Hope it is clear. The anticipation for the next year is that cost will go up as under. Fixed charges will go up by 10%, which means the fixed charges will be 5 lakh it was. Okay, 5 lakh 50,000 then. 5 lakh 50,000. Direct wages 20%, which means direct wages will come to 60 rupees. Correct? Direct material 5%, which means direct material will come to 157.5. There will be no change in the selling price. Moral of the story, PV ratio will change. There is an additional order for 2000 stick in the next year. Now, calculate the lowest price that can be quoted so that company can earn the same profit as it is earned in the current year. See, slowly it is going towards decision making. If you see, they're asking you guys, how much should be the new selling price? You are going to quote only for that 2000 agarbattis. Hey, for 5000 you can sell it at normal selling price. But for the 2000 agarbatti, so not agarbatti, what stick it is? Hockey stick. Sorry. Hockey stick, how much should be the selling price to be quoted? They are asking. Shall we compute? Yes? I don't know. By looking at ads, stick means only that stick will come. Now, listen. Listen. Guys, we have 5000 units. We have 2000 units. Correct? And here the best part is fixed cost won't increase because our capacity is 10,000. We are just able to produce. I mean, we want to produce just 70% of it. Fixed cost remains same. Now listen. First, material cost. For 5000 agarbattis, so hockey stick, 157.5 into 5000. 7 lakh 87,500. For 2000 hockey stick, how much? 3 lakh. That will be your material cost. That will be your material cost. Okay. Direct wages. Direct wages. 60 rupees into 5000 stick. 60 rupees into 2000 hockey sticks. That is the thing. And you know that there is a variable overhead also. Variable overhead also. Guys. How much is your variable overhead? Sorry? 62.5 no. Into 5,000. 3 lakh. 2,000 into 62.5. 1 lakh. Selling expense, variable, how much it is? 12.5, yeah. 12.5 into 5,000. 62,500. Next one. 25. May I know the total variable cost here? For the first one. You tell me for the first one. And second one also you tell. First one how much? 14 lakh? 62,500. Second one how much? 5 lakh 85. Now listen. First one will find out how much profit we are making this year. How much profit we are making this year, guys? Fixed cost is how much? 5 lakh 50, no? Add it to the cost. Add it to the variable cost. 5 lakh 50. So how much is the total cost here? 20 lakh? Try to understand. For 5,000 hockey stick, fixed cost completely recovered there only. 20 lakh 12,500. How much is our sales from 5,000 hockey stick when we are selling it at the rate of 500? 20. Correct? Now, selling price is 25 lakh. Cost is 20 lakh 12,500. How much profit we are able to achieve this year? 4 lakh 87,500. But last time, how much did we achieve? For each and every unit, we made a profit of 125. So for 5,000 units, how much profit we made? 6 lakh 25,000. This year we are making 4 lakh 87,500. Which means, what is the difference between these two profit? 1 lakh. Which means, now we have to make the profit of 137,500 by selling the 2,000 units. Now, shall I take the sale of the 2,000 units as X number of X rupees X? So, the sales will be 2,000 X minus variable cost we computed 5,85,000 already. Yes or no? Fixed cost is anyhow, it's already recovered there. No need to recover here. So, that should give you 1,37,500. How much is the X people? 361.25. That is, you have to quote at least 361.25 per hockey stick. You have to quote at least 361.25 per hockey stick. Hope it is clear, people. Yes? No doubts? And this was for 10 marks. It's all about application of knowledge. That's what I'm telling. If you see the size of the question, it's not going to be like marks is not depending on that. Marks is depending on what you apply. Here it is the pricing decision. How much you should charge. You are going to charge at least how much you are going to recover total cost. Here total cost don't include fixed cost. Because you sell that to 2,000, don't sell. Fixed cost will be there. Getting it? Shall we go to the next one? Mark it as LMR. That one. Mark that sixth one as LMR. No, that we'll talk tomorrow. Shall we start? Moon Limited produces product X, Y, Z and has decided to analyze its production mix in the respect of three products X, Y and Z. Cost component, see there, direct material, variable overhead. Now, direct labor, rate per hour, rupees 4 for department A, rupees 8 for department B. Hours per unit, 6 and 6. Hours per unit of Y is 10 and 15. Hours per unit of Z is 5 and 11. There are two type of labor involved here. From current budget, further details are below. Annual production at present 10,000, 12,000, 20,000. Estimated selling price per unit 312, 400, 240. Sales department estimate possible sales next year. Demand 12,000, 16,000, 24,000. Now my question is, whenever demand as well as capacity is given, you can produce maximum or minimum of those two. Correct? Now, annual production capacity is 10,000, but demand is there 12,000. Array, let it be, but can I produce so much? I can produce only. But will you produce that, sir? I don't know. I will tell why. Next, going to why. 12,000 is a capacity where demand is there for 16,000. Moral of the story, 12,000 only. Z, 20,000 is a demand capacity, 24 is demand, still 20,000. Now listen, there is constraint of supply of labor in department A, and its manpower cannot be increased beyond its present level. Now, guys, present how much they are telling? Present how much they are telling? And listen, they are asking you to find out, identify the best possible product mix of Moon Limited to calculate the total contribution from the best possible product mix. Whenever the key limiting factor is there, decision should be made on the basis of contribution per unit or contribution per key limiting factor. Contribution per key limiting factor. Here the key limiting factor is labor hours in department A. Shall we find out how much is the labor hours available? They are telling present. Guys, 10,000 into 10,000 into product X 6 60. Oh, by the way, sorry. Try to understand. Here the production, they are not telling it's our capacity. They are telling it's what we are operating, which means you can produce more also. If the requirement is there, you can produce more also. Sorry, they are not telling your production capacity here. They are telling what we are producing right now. Getting it? If at all they give it as a capacity constraint, production constraint, then we would have produced only so much. However, they are telling it as right now what we are producing. Here you need 60,000 hours. For Y, you need 10, which means Z, you need 5, which means so total hours of department A labor available is how much? Sorry? 2 lakh. Okay. Now using this, shall we find out the best possible product mix here? All we need is first contribution per unit. Shall we? A is there. Sorry, not A. What are the products? X, Y, Z. Selling price. How much is the selling price per unit they are telling people? 3? Okay. 400. 240 minus variable cost includes 4 elements in fact. One is material. How much They are telling per unit. They are telling okay, 160, 120, 80. Okay. Next is variable overhead. They are telling that per hour they are telling or per unit. Okay, fine. How much? 8, 20, 12. Now listen, very important one. Labor cost. We have two department, A and B. A labor cost for product X. How many hours is required? 6 hours per unit. And how much is the rate per hour? 6 into 4. Next, for Y, 10 hours is required. For Z, 5 hours is required. Understanding? Going to department B, 6 hours is required at the rate of 8 rupees. Next one, 15 hours required at the rate of 8 rupees. 120, 80. Now tell me contribution per unit here. First one, 72. Second one, 100. Third one, 40. But are we going to take a call based on this? No, we are going to take a call on the basis of contribution per key limiting factor. In this case, it is contribution per labor hour of department A. Guys, listen. Product X is using how many hours of A? 6 hours. 24 rupees is for, 72 rupees is for 6 hours. Per hour, how much contribution? Okay. Next, your Y is using how many hours? 10 hours. 100 is for 10 hours. Per hour, how much? 40 is for, correct? Here the rank will be 1, 2, 3, which means produce X as many as possible, produce Y after that if anything remains, produce Z after that if anything remains. Shall we see? Now, X, how many units demand is there? 12,000. Now, if we produce 12,000 units, how many hours is required per unit? Per unit. 6 hours. Of course, department A. How much it is? First we computed how many hours are available? 2,80,000. Correct? So after producing X 12,000 units, 72,000 is gone. Now how much is remaining? 2,08,000. Shall we go to the Y? Next is Y only, no? How much is the demand? 16,000. And how many hours are required? 10 hours. Which means 1,60,000 hours. So in this 2,08,000, 1,60,000 is also gone. 48,000 hours. Now Z, guys, 48,000 hours. How many units could be produced? One unit, how many hours? 5. 9,600 units. So the mix will be X, Y, Z. First one, X is 12,000. Y is 16,000. Z is, I hope you guys understood. This will be your possible, best possible mix. They're asking, calculate the total contribution from it. That is contribution per unit. X contribution per unit 12. Don't take hourly computation. A 72 per unit, 72. Second 100. Third 40. Because here it's units. No, you should multiply units with contribution per unit or contribution per hour. First one, how much people? 8 lakh. Second one. Third one. 3 lakh. Hope it is clear, people. Hope it is clear. No doubts in this. Peace. Mark it as LMR. Yes, sir. 48,000 are available, where each and every unit of Z takes 5 hours, which means in 48,000 hours we can produce 9,600 units of Z. 24,000 demand is there. You don't have so much labor hour to produce. That's what key limiting factor is. Next one, 8th one, concentrate. During a particular period, ABC Limited has furnished you the following data. Sales 10 lakh, contribution to sales is 37, PV ratio. Margin of safety is 25%, which means margin of safety is 2,50,000. Right now break even sales is 7 lakh. Correct? A decrease in selling price, decrease in fixed cost could change the contribution to sales ratio to 30%. They are telling that fixed cost decrease doesn't matter, but selling price is decreasing, where contribution will fall to 30% from 37%. MOS to 40% of the revised sale. They are asking you how much would be your revised fixed cost, how much would be your revised sales, how much would be your new break-even point. Go through the question, people. Shall we start? People, shall we start? What we can do here? Guess. We have done one question like this. Not this. Tell. A. Are they telling the reason for decrease in PV ratio as the selling price? Hello. Now my question is, does that mean there is no change in variable cost? Yes, because no information is given. And by any chance, are they telling how much unit of sales got decreased or increased? That means, can I take unit sold also as same? Which means, last time, how much was my variable cost? 10 lakh was sale. If the contribution was 37%, variable cost was 6 lakh, 30,000. Able to understand? Now, when the number of units sold remains same, don't you think variable cost also remains same? Moral of the story. This is which one? Illustration may be discussed. No. Illustration 4 or 5. First year, nothing changed. Second year, savings in fixed cost and all. Hey! Practical, no. Illustration. 2 years data they have given. Whatever it is, leave. Why I am asking you guys? You are attending for the first day, no? Sorry. I should have gone through basics. Sorry to start with PYPs. Don't practice in home. Very good. Shameless people. Huh. No, you remember which one it is? Which one? Like the... You remember, no? 21, 22 or 22, 23 something. You remember? Good then. Sorry. I take my words back. I taught you from the basic. Now listen. Shall I take my sales as X? My variable cost as 6,30,000 as it is, people? Because sales in units are not changed. That is giving you contribution of 0.3x. How much is X? 70% of 6,30,000. 6,30,000 divided by 3 into 7. Sorry? 14,70,000 sir. 9 lakhs sir. Yay! 630,000 is your variable cost, 70%. Rupees? By the way, that is your revised sales. Hello? They are telling MOS is 40% of sales, which means break even is 60% of sales. How much? 5 lakh. We know that at break even, contribution is equal to fixed cost. 5,40,000 into 30%. 1,62,000. Is that clear? Shall we go to the next one, people? Yes. This is also one of the nice question. See, where majority of you will do mistake. What do you mean by that, sir? Two manufacturing company A and B, market as LMR. A and B are planning to merge. The details are as follows. A and B are planning to merge, where the details are as follows, people. What is that, sir? Capacity utilization. A is using 90% of the capacity. B is using 60% of the capacity. Sales, variable cost, fixed cost. Assume that the proposal is implemented. Calculate break-even sales of the merge plant, capacity utilization at that stage, profitability of the merge plant at 80% capacity, sales turnover of the merge plant to earn the profit of 60 lakhs. When the merge plant is working at a capacity to earn a profit of 60 lakh, that is based on answer number 3. What percentage of increase in selling price is required to sustain 5% increase in factory overhead? Go through the question. We'll start. LMR you marked, This is one of the kind question where, conceptually you should be knowing it. Nowhere they ask. Basically if you see, nothing looks different, no. Sales, you know. Merge means what happens? Accounts, hey. Consolidation. Variable cost. Fixed cost. But listen. Here it won't work like that. Why, sir? Are both of that working at the same level of capacity? Can you take two different levels and treat it as one level? You should bring it to one common level. Any level it is. You can bring everything to 90, 60, 50, whatever it is. but you should bring it to one common level. Shall we? 100 would be great, no? See, I'm telling, if you want, you can go for 50 also. That's not going to change the things. So, if A, listen, A at 100%, you are understanding what I am trying to tell here? Because you can't just merge it directly. Because both are not operating at same level. If both are operating at same level, when you merge, the merge firm also will operate at same level. Here both are not operating at same level, then which level you will take? So, if 63 lakh is for 90%, 100%, sales would be 48 for 60. So, the merged firm 100%, our sales capacity is 1 crore 50 lakhs. Variable cost, 44 lakhs, okay. This one, 37 lakh. Merged firm, 77 lakh. 81 lakh. Fixed 50,000. Yes, sir. You can go for 50 also, but make sure both you take 50-50. Then merge firm also will be at 50. How much is contribution here? 26 lakh. Next one, 42 lakh 50,000. We don't care about this too, but tell me about the merge firm. 68 lakh. Is that clear? Fixed cost 90%, 13 lakh. 100%, 14 lakh. Very good. Fixed cost will change with level. 15 lakh at 60%, 100%, 28. Got it? So if you operate at 100%, how much would be your merged firm profit? 40 lakh, 50,000. Correct? Now, first one, what they are asking, break-even sales of the merged plant. Forget about break-even point. To find out break-even point, we got a fixed cost. One more thing we need is PV ratio. Now, guys, when the sale is 150 lakhs, contribution is 68 lakh 50,000. How much is the PV ratio? PV ratio? 45.67%. PV ratio is 45.67%. Hope it is clear. Now, guys, break-even sales. Fixed cost is how much? 28 lakh. PV ratio is how much? 45.67%. How much it is? 61 lakh? 939 shall we take? Okay. Also they are asking capacity utilization at this stage. Total capacity is 150 lakhs. No. How much is utilized here? 61 lakh 30,939 divided by 1 crore 50 lakh. Hello, madam. Sure. 20 point. That's what it's coming. Sure. 61 lakh 30,939 whole divided by 1 crore 50 lakhs into 100. 40 point. Hope it is clear. Next, profitability of the merged firm at 80% capacity. Guys, you know that contribution will vary with everything, no? At 100%, if the contribution is 68 lakh 50, at 80%, how much? Hmm? 54 lakh 80,000 minus fixed cost of 28 lakh. 26 lakh. 26 lakh. Hope this thing is clear. Sales will vary. Variable will vary in the same proportion, which means contribution also will vary in the same proportion. No. Next, sales turnover to make the profit of 60 lakh, which means our fixed cost is 28 lakh. Yes. Profit required is 60 lakh, which means we need total contribution of 80 lakhs, 88 lakhs, sorry. We need total contribution of 88 lakhs. Now 88 lakh means 45.67, 100 is question mark. 1 crore. Hope you guys understood, or you can go for the normal procedure. Sales minus variable cost, contribution. Contribution is 0.4567 S minus 28,000 is equal to 60 lakh. Now 0.4567 S is equal to 88 lakhs. S is equal to 88 lakh divided by 0.4567. S will come as 1 crore 92 lakh 68,666. Hope it is clear. When the merged plant is worked at a capacity to earn a profit of 60 lakh, what percentage of increase in selling price is required to sustain increase of 5%? That is, now we are working at 192, 68,666. If you know more than our 100% capacity, yes or no? Now, into they are telling how much should be the selling price is required to be increased to sustain the 5% increase in the fixed cost. So how much will be our new fixed cost? Right now 28 lakh, our new fixed cost will be how much? 29 lakh 40,000. Now listen, which means you have to account for 1 lakh 40,000 fixed cost, extra fixed cost. Correct? Now how much is the sales? 1 crore 92 lakh 68,666. So how much sales should increase? Because variable cost remains same. Hey, listen. Your variable cost remains same. Along with change in selling price, will your variable cost will increase? Your variable cost remains same, which means try to understand profit you want to remain same, where fixed cost is increasing, which means don't you think contribution should increase by 140,000? Contribution should increase by 140,000. That means variable cost is that much only, which means to contribution to increase by 140,000, sales should be 140,000 plus. Now, right now 192, 68,666, 140,000 is how much of 1 crore 92 lakhs 68,666? 0.726. Selling price should be increased by that much. See, if at all you didn't understand, listen. Now, sales how much they are telling? 1 crore 92 lakhs. Okay. For this, variable cost is coming as how much? Hey. 54.33% of this. Huh? Hey, 54.33% of this? $666. That gives you contribution of how much? 88 lakhs. From that, fixed cost of 28 lakh will go up. Yes or no? That should give you profit of. Now listen. They want profit of 60 lakh only. They want profit of where the fixed cost is going to be 29 lakh 40,000. Got it? Which means the contribution what you want is not 88 lakh. It will be 89 lakh. Able to understand what we are doing here? Yes? Now, guys, are the number of units sold is changing? Variable cost per unit changing? Which means how much should be the variable cost? Same, no? Hello? Now, if you want so much contribution where the variable remains same, how much should be the sales? Correct? Earlier it was 1 crore 92 lakh 68,666. Now it is 1 crore 92 68,666. How much is the increase? 1 lakh. Compared to previous one, how many percentage? I hope this is what we have done there. Hope you guys understood. Pakka. And listen here. Try to do this 10th one as a homework because we already discussed in the cost sheet. 70% those things. You remember? 70% capacity to use other 30%. That thing. Try to do it as a homework. This thing. If you get any doubt, let me know tomorrow. Remaining questions, shall we continue tomorrow? Thank you. Bye bye. We'll complete this PYPs. Then only we'll go to the next chapter. Okay. RTPs we'll see later part. Good afternoon all. Shall we continue with the previous discussion what we were doing? PYP na. And we discussed till where? Sorry? 10 na. The 10th one I gave as a homework. Have you guys tried it? Easy, no? I hope I don't have to discuss it. I think in both the scenarios we are going to accept it. Either it's the 130 or 129 because I think we got 128 or 127. So both we are going to accept it. Generally students just to confuse that they have given 130, 129. So one we will choose no, one we will choose yes, no, generally. That's why they have given. Yesterday were there, huh? I mean, weekly 4 days you will be there, no hospital, so. Huh. What happened? Number of people is less, huh? You want any particular person? Huh? Everyone are there, no, whoever you want. Peaceful, no. Then concentrate. We'll go to the next question. AZ company has prepared its budget for the production of 2 lakh units. Variable cost is 16 rupees. Fixed cost is 4 rupees per unit. Moral of the story, total cost is how much, people? Rupees 20 per unit. Correct? The company fixes its selling price to fetch a profit of 20% on total cost. So plus 20%. So the selling price is rupees 24. Selling price is rupees 24. You are required to. By the way, how much is your fixed cost? We know that 4 rupees per unit we got when we divided it by 2 lakh. Now multiply it with 2 lakh. Very good. 80 lakhs. Fixed cost is 8 lakhs. Now, If the fixed cost is 8 lakhs, variable cost is 16 rupees. Hey Akash, contribution is 8. Hey, concentrate. Sridevi. Now listen. Selling price is 24, variable cost is 16. So the contribution will be 8. So if rupees 80 is contribution, 24 is selling price, how much would be the PV ratio? 33.33%. First they are asking present break-even sales in rupees as well as in units. Guys, rupees very simple. How much is fixed cost? Divided by PV ratio 0.3333333333. 24 lakhs. In units, much more simple. Fixed cost divided by contribution per unit. Contribution per unit 8 rupees. 1 lakh units. Hope it's clear. If you don't want to use formula, you know that, right? Contribution at contribution at break even is equal to contribution at margin of safety is equal to present PV ratio. We already computed and kept 33.33%. Revised break even sales in rupees and revised PV ratio if it is reduced selling price by 10%. So the selling price from 24 it will go to 21.6. 21.6. Okay. If the selling price is 21.6, your variable cost will remain 16 only. So the contribution will be 5.6 divided by 21.6 into 100. 25.93%. And revised break even. Revised break even is very simple. Fixed cost will remain 8 lakh only, no. Contribution will change 25.93. Sorry? Wait 1 second. 230. Sir. What is it? Selling price is 21. Variable cost is 16. Contribution is 5.1. 5.6, sorry. What would be the revised sales in quantity and the amount if company desires a profit of 20% more than the budgeted profit? How much was the budgeted profit, people? You are budgeting to sell 2 lakh units at the rate of 24 with the contribution of 8 rupees per unit, which means your budgeted contribution was 16 lakhs. 2 lakhs into rupees 8. In that, fixed cost will go to 8 lakh, which means your budgeted profit was how much? 8 lakh. But your new plan is how much? 20% over and above the budgeted profit. 8 lakh plus 20%. 9 lakh 60,000. Now, shall we take sales as yes? If the sales is yes, then selling price will be 21.6. Correct? Which means contribution per unit will be 5.6. Variable cost will remain same. 5.6 into yes, that is your contribution, minus fixed cost of 8 lakh. That should give you 9 lakh 60,000 profit. That is 17 lakh 60,000 divided by 5.6. That gives you 286 units into rupees 21.6. 67,88,571. That would be your new sales, revised sales to be achieved. Hope it is clear. Shall we go to the second one? Sorry, 12th one. Okay. Top Tech Manufacturing Company is evaluating two possible machines for the manufacturing of superior pen drive. Generally, guys, whenever you are planning a machinery, all these plans and all, which one you will choose? One which gives the highest contribution. If at all they have given a sales information. No, sir, sales information is not given. Then you will go with the one which gives you minimum cost. Either you will decide on the basis of maximum contribution or you will decide on the basis of minimum cost. Now, the following information is available. Machine A, machine B. Selling price is 400. For customers doesn't matter, no. You produce it through machine A or machine B. End of the day they are going to pay you how much? 400. Variable cost 240, 260. Total fixed cost are 350 lakhs, 200 lakhs. Capacity is 8 lakhs and 10 lakhs. Required. Recommend which machine should be chosen. Here they have given information about revenue. So we'll decide on the basis of contribution or profit. Profit. Why? Two different fixed cost. Which means fixed cost also relevant cost over here. If the same fixed cost, then profit doesn't matter. But here, two different fixed cost, profit will affect. So, now, Jayashree, how much is the contribution, madam? $160 in case of A, 140 in case of B. Correct? Now, guys, if you use machinery A, you can produce 8 lakh units. Correct? So, 8 lakh units, if it gives you 160 rupees, can I tell that is 1,280 lakhs rupees in lakhs? Yes? A. B. B. If it gives you 140 per unit, 10 lakhs, 1,400, that will be your sales. Sorry, contribution. From that fixed cost you have to reduce 350, 200. 1,280 minus 350, 930. 1,400 minus 200, 1,000. Which one would you select? Machine B, because that is giving you more contribution. Correct? More profit, sir. More profit. Now, first one is done. Second, would you change your answer if you are informed that in the near future demand will be unlimited, which means how much ever you are able to produce, you can sell it. And the capacities of two machines are as follows. 12 lakh unit, 12 lakh unit. So both are same only. In this scenario, we can go for the indifference point. IDPs. Where in the IDP people, if at all 12 lakh goes more than IDP, then you are going to select one with the lower variable cost. If at all it goes less than IDP, you are going to select one with the lower fixed cost. But anyhow, they ask for the 5 marks, which means that doesn't deserve so much, explanation and all. Simple. All you have to do is, again, you know that how many units? 12 lakh units, no? So, 12 lakhs into 160. 1,920 lakhs in case of A. 12 lakh into 140. 1,680 lakhs in case of B, minus fixed cost of 350, 200. 1,920 minus 350, 1,570, 1,480. Here, of course, we are going to choose A. We are going to choose A. Because when the numbers are restricted, your revenue is restricted, it is very good if you are able to recover your cost as early as possible, as your fixed cost will be recovered in case of A much more faster. Whatever the extra will be contributed, that will be contributing directly towards profit only, no. So of course A is better. In earlier case, B was better because there we were able to produce more number of units, no. So hope it's clear. Any doubts here? 12th one? No doubts? We can proceed then. Shall we? UV Limited started a manufacturing unit from 1st October 2021. It produces designer lamp and sells its lamp at 450 per unit. So the selling price is 450 rupees, and during the first quarter, it produced and sold 12,000 units, loss of 35 per unit. Next quarter, it is able to produce 30,000 units where it made a profit of 40 rupees. You know that they are talking about units and profit. Correct? Now, they have given information about 2 quarters. Correct? Quarter 3, quarter 4. Sales. They are telling in quarter 3, we are selling around 12,000 lamps, and each lamp will fetch you 450 rupees. So 12,000 into 450, 54. Okay. In the fourth quarter, we are selling 30,000 units. 30,000 units will fetch you 1 crore 35 lakhs. So change in the sales is, guys, around 46 plus 35, 51, 81. Change in sales is 81 lakhs. Profit. First, it is fetching you a loss of how much? 35. So 35 into 12,000. 4 lakh, but loss, remember. Next one is fetching you a profit of 40 rupees. 30,000 into 40. But profit. So the difference is, people, 16 lakh 20,000. Got it? Now 16 lakh 20,000 divided by 81 lakh will give you 20% as PV ratio. PV ratio will be 20%. Now, any of the sales you can take and find out a fixed cost. Which one shall we take? First one or second one? First one, okay. When I tell any of the sales, always choose one with the positive numbers. Otherwise, you might commit some mistake. So, better to go for one with the profit. I mean, you can do with sales, loss also, but why to complicate the stuff? So, we'll go with the profit. Okay. First one, second one, sales will be how much, people? 30,000 into 450 into 20% will be your contribution. 27 lakh was your contribution. From that you reduce the fixed cost, because of which you got around how much profit? 30,000 into 40? 12 lakh profit. So how much did you reduce here? So fixed cost for a quarter is 15 lakhs. Now you know break-even sales is 15 lakh, sorry, fixed cost is 15 lakh, PV ratio is 20%, which will come to profit. Calculate the profit if the sales volume reaches 50,000 in the next one. We know that here the selling price is not changing, fixed cost, variable cost is not changing. Moral of the story, PV ratio won't change. So 50,000 into rupees 450 into 20% will give you contribution. How much? 45 lakhs is your contribution, whereas fixed cost is 15 lakhs. So the expected profit is around 30 lakhs. Expected profit is around 30 lakhs. If it's done, we can go to the 14th one. Hello. Shall we? ABC Limited sells its product Y at a price of 300. Variable cost is 180. Contribution is how much? Okay. PV ratio please. 40%. Fixed cost is 16,80,000 per year uniformly incurred throughout the year. Profit is 7,20,000. First, they're asking about break-even point in units as well as rupees. Very simple. Value means fixed cost 16,80,000 divided by PV ratio 0.4. Next one, they want it in units. That is fixed cost divided by contribution per unit, which is 120. 14,000 units. Now you got to know break even sales 42 lakhs. Correct? Now you have to find out margin of safety. You can go for the total sales approach. You know the fixed cost, you know the profit. So your contribution should be 16,80,000 fixed cost plus 7,20,000 profit. Your contribution should be 24 lakh. Correct? And we know that contribution is 40% of sales. If the 24 lakh is 40%, total sales should be 60 lakhs. Total sales should be 60 lakhs. Hope you guys understood this. So if the total sales is 60 lakh, break even point is 42 lakhs, which means your margin of safety should be R simple profit 7,20,000 divided by PV ratio 0.4, 18 lakhs. It's completely your call. Profit made when the sales are 24,000 unit. Now contribution will be 24,000 into 120, 28 lakh 80,000. From that you are going to reduce the fixed cost of 16 lakh 80,000. You will get the profit of around rupees 12 lakhs. Sales in value to be made to earn the profit of 10 lakh. Again simple question. Shall I take the contribution as 0.4s minus fixed cost 16,80,000? That should give you profit of 10 lakhs. Therefore 26,80,000 people divided by 0.4 will give you so sales to make the profit of so much is 67 lakh. Hope it is clear. Anyone, any doubt in this? No doubts? Peace? Okay. This one is crazy question. LMR Pro Max. LMR. Before going to exam only, see and go this twice at least. LMR square. Shall we? Concentrate, very important. An agriculture-based company having 210 hectares of land is engaged in growing 3 different cereals, namely wheat, rice, maize. Okay, they are into growing of 3 different cereals, which are those wheat, rice, maize. The yield of the different crop and their selling prices are as follows. So, yield per hectare, A, not total yield, it is yield per hectare. Wheat 200, rice 500, maize 100 kgs. Selling price per kg. Wheat 20 rupees, rice 40 rupees, maize 250 rupees. The variable cost data for the different crop is given below. All figure in rupees per kg. A, this is not per hectare, this is per kg. Wheat, labor 8 rupees, packing 2 rupees, other expense 4 rupees, per unit 14 rupees. Rice, labor 10 rupees, packing 2 rupees, other variable 1 rupees, 13 rupees. Maize, 120 is a labor charge, 10 rupees is packing material, and other variable is 20, 150. Correct? Now, the company has the policy, this is important. The company has the policy to produce and sell all 3 kind of crops. Awesome. What their policy says? Their policy says to produce and sell all the 3 kind of crops. That is wheat, rice, maize. The maximum and minimum area. This is the key point here. This is the key point here. Minimum is also there. Yesterday while explaining theory, I told you, if the minimum is there, first you should satisfy that. Over and above that, whatever the resource remains, that should be distributed to remaining things on the rank basis. Got it? Okay. Maximum 160, 50 and 60 hectares. Minimum 100, 40 and 10 hectares. First, you are required to rank the crops on the basis of contribution per hectare. Simple. Contribution per hectare. Here, listen. We have 3 crops. Which are those? Wheat, rice, maize. Correct? Here, listen. Luckily, yield they have given per hectare only. Correct? Yes? Or before yield, we'll find out first how much is a contribution per kg? Selling price. Wheat, how much is the selling price, people? Huh?
20,
Rice,
40,
maize.
250.
Wow. So by looking at this, which one will you choose? Maize. Let's see. Variable cost. Wheat, how much? Rice,
30,
maize. Now we'll get to know how much is contribution per unit. Wheat, rice, 20, maize. Correct? Yield. Per hectare. How much yield? Okay. Okay. Rice is just 500. Maize is 100. kgs. Now, guys, contribution per kg, number of kgs can be produced in 1 hectare. That means how much is contribution per hectare? First one, 12,000. Second one, fourth one. So, which is better? Second, third. Hope it is clear. Peace. First one is done. Second, determine the optimum product mix. Guys, here you can approach in 2 ways. Approach number 1. First, blocking the minimum. That is 140-10 you have to grow, which means block the minimum to 150. Correct? How many hectares are available? 210. 150 is done, which means how many hectares are remaining? 60. In that 60, which and all you can grow. First priority should be for rice. Rice, maximum we can grow 50. But we, in that 150, when we blocked, already 40 is done, no? Which means extra how much will grow? Correct? Wheat. Next priority is wheat, right? Already 100 is grown when we did that 150. Extra how much you can grow? 60. However, do you have so much hectare left? 60 was left. In that you grew rice 10, which means 50 is remaining. Everything you will grow wheat. So 150 hectares you will grow wheat. Maize you will grow 10. This is one way of deciding. One more way is taking the numbers directly. That is, that rank first is rice. So 50 hectares, well within 210. So select 50 first. Rice. How much hectare is remaining? 160 is remaining. Next priority is wheat. If you see the wheat you can grow whole 160. But the problem is you have to grow maize 10 also. So after giving minimum 10 to maize, left for wheat is just 150, although you can grow 160. This way also you can do. No, sir. Some other way. You only decide what shape, like field you want. Like this, your call. First, grow 100 hectares of wheat. Okay. Next you grow 40 hectares of rice. Next you grow 10 hectares of maize. Now remaining is how much? 160 acres. Sorry, 60 acres. 60 acres. In that, first priority should be for the rice. However, rice you have already grown 40. Maximum you can grow is, okay, 10 you grew. 50 is remaining. Next priority is wheat. Of course, wheat you can grow 160, but you don't have so much space. So you will grow the remaining 50. So wheat 150, rice 50, maize 10. This way also you can decide. Either of the ways, just decide correct numbers. That's it. So rice you are going to grow 50 hectares. Wheat you are going to grow 150 hectares. Maize you should grow. Otherwise we would have grew wheat only, no. Because wheat still maximum we didn't reach. Done. This is your optimum product mix. Next, they are asking you how much profit could be achieved from this product mix when the fixed cost is 2145. Forget about it. How many hectares we are growing? Wheat 150 hectares. Correct? Rice 50 hectares. Maize 10 hectares. May I know the total contribution, please? You know the contribution per hectare. You know number of hectares. 12,000 into 150. 18 lakhs. Second one, 6,75,000. Third one, Tuesday there is a test on employee cost. Employee cost and direct expense test on Tuesday. Okay, done. Total contribution is done, right? And Monday we are starting with standard costing. Total contribution is done. How much is the overall contribution for the company? 25 lakh. From that, how much is a fixed cost? Moral of the story. Hope it is clear. Anyone, any doubt in this? Go through this. If you have any doubt, let me know. Otherwise, we can proceed to the next one. Which question it was? Now listen. Question number 16. People, question number 16 is there, no? That is your cost sheet question. Super pen, normal pen of PYP, that plastic case, silicon case in case of RTP, that question we have already discussed, no? Material is 2 times, labor is 1.6 times, sorry, 0.6 times something. Same question, see. Okay, so can you guys do it on your own once? Done. Going to the next question. The following information pertains to ZB Limited for the year. PV ratio 30%, margin of safety 25%, fixed cost 12,30,000, break even sales would be 12,60,000 divided by 0.3. Now, total sales value at present. Listen, you know that 25% is margin of safety. That means 75% is break even sale. If 75% is 42 lakhs, 100% is 50. Simple. Proposed sales value. If the company wants to earn the present profit, how much ever they are earning, present profit after reduction of 10%. So right now, first find out the present profit, people. You can use it in 2 ways. One as a contribution of MOS or use the total sales also. If you use total sales, if the total sales is 56 lakh, then the contribution will be 30% of 56 lakh. 16,80,000 is a contribution. In that 12,60,000 will go as a fixed cost. 4,20,000 will be your profit. So right now profit is 4,20,000. Correct? Next, what they are asking, what should be the sales value so that after reduction of 10% in fixed cost, we could achieve the same profit. Which means, shall I take that sales as yes, sir? Then contribution from it would be 0.3s, 0.3s, correct? Because no change in selling price and variable cost, minus fixed cost. It won't be 12,60,000 anymore. It will be 12,60,000 minus 10%, 11,34,000. That should give you profit of 4,20,000. Rupees 51,80,000. Your proposed sales value is, guys, 51,80,000. Anyone, any doubt in this? Okay. Sales in value to be made to earn a profit of 20% on sale, assuming Fixed cost remains unchanged. Unchanged means they are talking about main question here. Shall I take sales as yes? Then the contribution will be 0.3s. From that, if you reduce 12,60,000, you are expecting profit to be 20% of sale, that is 0.2s. Can I tell 12,60,000 divided by 0.1, which will come to rupees 1 crore 26 lakh. Sales to achieve that profit is rupees 1 crore 26 lakhs. New MOS, if the sales value at present computed in point number 2, that is 56 lakh, decrease by 12.5. It is 56 lakh guys minus 12.5%. Total sales will come to 40. Guys, are they telling it is due to selling price? Are they selling it is due to selling price? No. Which means we assume selling price remains same. Variable cost anyhow it's remaining same. So don't you think straight away our PV ratio also will remain same? Fixed cost is remaining same. If the PV ratio and fixed cost remain same, will there be any change in the break-even sales? When there is no change in the break-even sales, can I take my break-even sales as 42 lakh itself? Can I take my new margin of safety as? Yes? Any doubt in this? No doubts. Clear? Paka? Okay. Shall we go to the 18th one here? MNP Company Limited produces two products A and B. The relevant cost and sales data per unit of output is as follows. Per unit they are telling direct material, direct labor and variable overhead. Together it will come to around 130, right? This one 120. So here the contribution is 50 only. Correct? But listen here. Now the thing comes. What is it, sir? Availability of machine hour is limited to 55,000 hours in the month. So in a month we are able to use only 55,000 hours of machine. Monthly demand for A is 5,000 units, B is 6,000 units respectively. The fixed expense of the company is 140,000 per month. Variable overhead is 4 per machine hour. Guys, here if you are charging 40 rupees, then how many hours you should have used? 10 hours, no? 4 rupees if you charge for 10 hours, then only we are going to recover per unit 40 rupees, no? Here 5 hours. 20 rupees you are recovering. Per hour 5 rupees. Mark it as LMR. I mean, in fact, examination, if it has come, everything should be LMR only. That's why it is coming in the examination now. Now listen. 5,000 of A, 10 hours is required. M plus 6,000 of B, 5 hours is required. M plus total 80,000 hours are required. Do you have so much? No. You have only 55,000 hours. Can I tell availability of machine hour itself is a key constraint over here? Okay. Now, company can produce both according to the market demand. Okay. Calculate the product mix that generates maximum profit for the company. Guys, very simple. Per unit, how much is a contribution in A? 50. B? But always and always, whenever there is a key limiting factor, the decision should be made on the basis of contribution per Key limiting factor here. Which is the key limiting factor? Machine hours. So if 50 rupees is for 10 hours per machine hour here, 5. If 50 rupees for 5 hours per machine hour here it is. So the first priority should be for B. Second priority should be for A. That is your product mix. No, not product mix, priority. Product mix means how many units you should tell. Of course, you are going to produce all the units of B if at all the machine hours are sufficient for that. 6,000 into 5. 30,000 hours you are going to utilize completely towards B. Now, remaining 25,000 hours divided by 10. You are going to produce 2,500 units of A. So the product mix will be A 2,500, B 6,000 units. I hope it is clear. Now we know that they are asking us the calculate the profit of the company. Find out the contribution, people. 2,500 into 50 M plus, you can add together and take it down because both are 50-50 only. 6,000 into 50 M plus MRC. Your contribution is 425,000. Fixed cost is 140,000, which means 2,85,000 is profit. 2,85,000 is. Anyone, any doubt in this particular question? Here, why we decided on the basis of contribution, people? We decided on the basis of contribution because fixed cost is same. You produce A, you produce B, you produce 1,000 of A, 5,000 of B, 5,000 of A, 1,000 of B, whatever the drama you do, end of the day, fixed cost is same. Irrelevant over here for decision making. That's why we decided on the basis of contribution. Hope it is clear. If it's clear, shall we go to the next one? Illustrate question number 19. November 23. R Limited produces and sells 60,000 units of product AN at its Noida plant. Okay. The selling price is rupees 15 per unit. Done. The variable cost is 80%, which means variable cost is 12 rupees. Contribution per unit is 3 rupees. Variable cost is 12 rupees. Contribution is 3 rupees. Fixed cost during the period is 420,000. How much is the fixed cost, people? 420,000. The company is continuously suffering a loss. Great. And management plans to shut down the Noida plant. Awesome. Fixed cost is expected to reduce by 250,000. If at all you shut down the company, still you are going to incur the fixed cost, but not 420. It will be reduced by 250,000, which is also along with this additional cost of shutdown will be around 25,000 more, which means if you shut down, still you have to incur 1,95,000 loss, which means if at all your company is giving you loss less than 195,000 by running it, don't shut it down, run it. If it gives the loss of more than 195,000, then only shut down it. Got it? Whether Noida plant to be shut down. Very simple. We got to know that contribution per unit is 3 rupees. We are producing and selling 60,000 units. 60,000 into 3, 1,80,000. That is your contribution. Minus fixed cost. Because you are running, you have to incur 420,000. Which will come to 2,40,000. When it is 2,40,000, when it is 2,40,000, people, it is loss is more than 195,000 at shutdown point. Better close the business. Better shut down the business. Correct? Correct now? Now, find out the shutdown point they are asking. Which will be your shutdown point? Boss, I am going to bear the loss up to 195,000 because whether I produce or I don't produce, 195,000 I have to incur, no? So I'm okay to incur, madam, okay to incur up to 195,000 loss. More than that, then only I will shut it down. So shall we find out how many units will give us 195,000 loss? If at all we produce and sell less than so many number of units, then it is loss. If you produce more than that, loss only, but lesser than your shutdown cost. So shall I take number of units, I mean contribution per unit be 3 rupees. Number of units to be sold as U, 3U minus fixed cost, because you are running, you will incur 420,000, that should give us loss of 1,95,000. Now 4,20,000 minus 1,95,000, that gives you 225,000 divided by 3. 75,000 units. That is, if at all you are able to sell more than 75,000 units, go ahead, don't shut it down, because your loss will be less than 195,000. If at all it is less than 75,000 units, then your contribution will be less only. Better shut it down. Got it? Shall we go to the next one? The following information is given by PQR Limited. 2 years data is there, 22-23, 23-24. Sales they have given. May I know the change in sales, people? May I know the change in profit? 11,20,000 minus 3,80,000. Sorry, plus 15. So may I know the PV ratio here? Change in profit divided by change in sales. 25. Calculate the break-even sales. Before that, of course, we want to know how much is our fixed cost. Which one shall we take? Very good. Take one with the profit. It will be easy. So how much would be the contribution? 2 crore 40 lakh into 25%. 60 lakh is your contribution, correct? But profit is 11,20,000, which means the difference should be your fixed cost. 48 lakh. They're asking you to calculate the break-even sales. That is, we know 48,80,000 is fixed cost divided by 0.25. One crore 95 lakh 20,000 in 24-25. That is next year. It is estimated that variable cost will go up by 5%. Fixed cost will be reduced by 480,000. So the new fixed cost will be rupees 44 lakhs. Selling price will remain same. Calculate the sales volume to earn the profit of 15 lakh. Selling price is remaining same, which means PV ratio will change. But by how much? Have they given how much is selling price? If they have given, it would be sorted. As they haven't given, shall we do one thing? We'll assume the selling price as 100 people. Listen here, old. If the selling price was 100, variable cost was, if the PV ratio 25, that means variable should be 75. Yeah. Now they are telling selling price will remain 100 only, but the variable cost will go up by 5%. 75 plus 5%. 78.75, which means your contribution will fall to 21.25 rupees also, percentage also, divide by 100 into 100. Hope it is clear. Now they're asking how much sales to be made. Shall I take that sales to be made as yes sir? Okay. Can I call it as 0.2125? Yes. Minus fixed cost will be 44 lakh. We need a profit of 15 lakhs. Contribution minus fixed cost is equal to profit. 59 lakh divided by 0.2125. 2 crores 77 lakh 64,706. Got it? Go through this. We'll proceed. Mark it as LMR because that computation of the PV ratio is the key here. What happened? To whom? Oh. Where in middle or what? No. To the other side. Mark this as a LMR. This is the question on pricing decision. No. Shall we start? JC Limited has production capacity of 80,000 units per year. Production capacity is there 80,000 units per year. Presently, company produces 60,000 units. Awesome. Without incurring any additional cost, we can also produce 20,000 more where and when required. The cost structure is as under: material 6 rupees, labor 4 rupees, variable overhead 2 rupees. May I know how much? So right now your variable cost is 12 per unit. Total fixed cost is 3 lakh per annum. Present selling price rupees 20 per unit in the month of January 2024. Company received an offer from the Japanese client to supply 20,000 units at a price of 14 per unit with the additional shipping of 8,000. Guys, will you accept it or no? When will you accept now? Now, very simple. Japanese client, should you accept it or no? Very simple. If at all they are bringing us even 1 rupee extra, we are going to accept, otherwise we will reject. Okay sir, to decide whether they are going to get that 1 rupee extra, at least 1 rupee extra, should we consider the fixed cost here? Hey, Whether you accept the Japanese client offer, you don't accept the Japanese client offer, you have to incur the fixed cost or no? Then why would you even consider that? So you are not going to consider fixed cost here for decision making. However, there is one cost, shipping cost of 8,000, that should be accounted for. Got it? First one, on the basis of the changes in the profit, they want to know through profit only directly. Advice to company whether the offer should be accepted or no. Listen here. If we accept the offer, 20,000 units can we sell? Yes or no? The variable cost to produce that is 14 rupees. 12 rupees. Selling price is 14 rupees, which means 2 rupees in addition as a contribution. Do we get or no? However, 8,000 we have to spend extra for shipping. Can I tell? 32,000 extra I will earn in terms of profit by accepting this offer. By accepting this offer, don't you think 32,000 extra we can know or no? Yes or no? However, if you want me to show it through the profit analysis, total, overall, there also we can present after accepting. Present people, sales, 60,000 units we are selling, of course, at the rate of 20 rupees, which will come to, awesome. However, after accepting, what you will do, sir? 60,000 units, of course, you will be selling at rupees 20 only, M plus other 20,000 units, you will sell it at 14, M plus MRC. $14,80,000. Your new sale will be 14,80,000. Correct? Minus variable cost 12 rupees, either of the case. So 60,000 into 12, 7,20,000. 80,000 into 12, 9,60,000. Also, there is shipping cost. However, present it won't be there. If you go for that, it will be there. 8,000. Correct? Minus fixed cost. Present also will be there. That time also will be there at the same level, which is basically 3 lakhs. So, how much is the profit at present? 1 lakh. How much will be the profit after accepting it? How much is the difference? Just by accepting that client, you will be able to make 32,000 extra. I already showed it here. So, it is better to accept. Better to accept. As it is increasing your profit by 32,000. Hope it is clear. Done. Shall we go to the second one? Will your advice be different if the customer is a local one? Hey, local one or foreign one? End of the day, profit is profit, no? Correct? Shipping cost also won't be there. In fact, your profit will be 40,000. But listen, let's say you 6 are my local customers. Okay. Now those two will enter. For you guys, I am selling at 20 rupees. Now those two will come. I'm like, for you guys 14 rupees. Enjoy. Will you 6? Keep quiet. Quantitative aspect, yes. 40,000 profit extra. Boss, go for it. Think from the practical point of view, qualitative aspect also. If you give discount to one local customer, the other local customers will ask for it. I might ask them, keep it secret, okay? In India, will the secret be secret? If at all they are Japanese, then I can tell you guys, no, I am exporting, that's why you guys also go and order from Japan, I will send at 14 only. That makes sense. But for local customers, if I tell it as 14, one local customer getting 14, other not getting at 14, automatically it will be a big blunder. So it is advised from the quantitative point of view, go for it 40,000 extra profit. If at all it is qualitative point of view, as local customers, other local customers might ask for the same discount, it is better not to accept. Hope it is clear. Third one. If the Japanese client offer for supply of 30,000 units, one catch is there here. What is it? Your excess capacity was only 20,000. No. Now they are asking for. No worries, sir. We'll give them 20,000. Other 10,000 will tell. Not there. Correct? No. Part supply of order is not accepted. So, Japanese company will tell what? Boss, either you give 30,000 units or you don't give units. It's your call. 20, 10, all this negotiation and all, we are not open. Okay. And shipping cost is treated as variable cost. That is 8,000, no? For how many units? 20,000 units. Per unit. 0.4 per unit. If you treat it as variable cost, then they are asking, analyze the impact on the profit of the JC if the order is accepted. Guys, listen, directly you can analyze and tell this way after revising your marginal costing for 3 times. Like after 3rd time revision, you can tell this way. Like what, sir? Concentrate. If at all you want to satisfy that Japanese order, then you have to give up 10,000 local sales. 10,000 units of local sales. If you give up 10,000 units of local sales, you will end up leaving 8 rupees of contribution per unit, which will come to 80,000. But what is the benefit we are getting? Able to sell literally 30,000 units. Awesome. But at the contribution of not 2 rupees, 1.6 rupees. Variable cost 12 rupees. Normal plus 0.4 rupees shipping. 12.4, which means contribution of 1.6. How much is your planned contribution earnings? 48. A. If you go for this, you will lose 32,000 from what you are earning. Better. Don't accept. Be okay with the local customers. Okay. This is much more depth analysis. However, sir, for our inter-level, what analysis is required? Very simple. Normal. If at all you accept people, sales will be 50,000 units at the rate of 20 plus 30,000 units at the rate of 14, total sales will be Sorry? 14 lakh. 20,000 variable cost for 50,000 units. It is 12 rupees, but for the 30,000 units, it is 12.4. 12 rupees normal, 4 rupees shipping. 0.4 rupees shipping. May I know the contribution? No. Minus fixed cost. 3 lakh, no? Your profit will be 1 lakh. Hey, before accepting, how much it was? After accepting, better. Worst part is what you know? You write down income, better don't accept. They are not even asking your opinion, whether to accept or no. They are asking, that is our call, idiots. Your work is clerical work. We accept. What happens to our profit, you tell. By accepting the offer, our profit will be decreased by 32,000. That is your opinion. You can't tell the don't and all. Got it? So always read the question. Find out what they are expecting you to answer. Like that EOQ. If they tell, by choosing ROQ, whatever the level we are ordering now, what is the impact on profit? You can't write and come. Go for EOQ. They are not even asking. They are asking, because of not going for EOQ, what is happening to your profit? Shut up and write down and come. Our profit is decreasing by so much because of not choosing EOQ over ROQ, our existing policy. Gotcha. Simple question. Mark it as pro. Ultra Pro Max. By the way, I have nothing to do with this. This is just a printing mistake. If at all this question comes in 2025 September, I say don't cancel my registration. I have nothing to do. Printing, typing error. It is not 25, 24. Imagine this comes next month. Crazy, no? Sale of Rastrith's classes. Huh? Example? Huh? You are reading in September. Then chill. I predicted it for September 25. For May 25, next I will tell. Listen here. Question number 22. This is also LMR. All these, if you see now, everything is key constraint question these days. That's what I told you. Slowly I say, see, when we started first question, second question and all, what is PV ratio, what is break even, what is next break even. Now you see. Shall we go to this question? ABC Limited is a well-known company for producing baby care products. The company produces and sells two variants of organic shampoo for children. Baby Rose, Baby Lily. Are these babies same? Which baby, sir? That one. Some question. Why you even remember which question? Activity based costing. Baby soft, gold, pearl, diamond. Are these two babies same? No, that was not ABC Limited, no? Okay, that is pearl, diamond, gold. This is rose and lily. That was soap. This is shampoo. That is beauty soap. The sales and cost data for both the products are provided below. Current demand and sales. Number of bottle are 4,000, 3,000. Currently we are operating at this level. Production capacity 7,500 and 6,000. Awesome. If at all we get a demand, we can produce 7,500 and 6,000 units total. Not more than that. Selling price are 600 and 750. Variable cost per bottle. Direct material 20 per liter. Okay. Direct material cost is 20 per liter. Here it is 160 they have given, which means how many liters must have been used? Here. Understanding? Cost only if it's coming 160. When per liter it is 20. How many liters? 8 and 10. Other variable cost are 270 and 350. The fixed cost amounts to 5 lakh, 4 lakh 50,000 for baby Roso, baby Lily. The production manager has informed that 1 lakh liter of material is available for production. How many liter of material is available with us? 1 lakh liters. A dealer has approached the company. You are reading question or seeing time? Okay. A dealer has approached the company and proposed to purchase both products at the existing selling price. Papa, some bakra is. If you had offered it lower also, we would have accepted if you have capacity. No. Because here all we concerned is recovery of variable cost. Over and above whatever we get is profit only. Sir, but fixed cost is not same. For decision making, fixed cost is relevant or irrelevant? Irrelevant. Why? Fixed cost would be relevant for that additional unit if you are incurring. Now, either you accept his offer, don't accept his offer, 5 lakh and 450,000 you have to know. Because you are producing 4,000 and 3,000. Irrelevant. Which are to be utilizing the remaining unused material. Which means try to understand material should be the constraint here. Only once. Sneeze? No. Oh, only once. What is this big question? Come on. However, he has insisted that all the bottles must be packed with eco-friendly packaging. Eco-friendly packaging. They want the shampoos in eco-friendly packaging, which will cost in 10 rupees extra. So 10 rupees extra we have to incur. Presently, company is not using this eco-friendly material of packing bottles. Guys, here they haven't given that. Next time if they give the same question in examination, they will tell currently company is using one bottle which will cost them 3 rupees. Then extra cost for eco-friendly you are going to take 4 rupees is the current bottle price. If extra cost you should take only 6 rupees. Hey, you can't tell him no, hold your hand, we'll put shampoo. Either you have to pack in that bottle or this bottle. Will you pack in both the bottle? Because you go for the 10 rupees bottle, you are going to save this 4 rupees or no? Which means extra how much you will incur? Here they haven't given nothing. Directly they told additional cost. Getting it? Required. Prepare a detailed statement showing the overall contribution and profit of the company after acceptance of the dealer's proposal. They are asking after accepting his proposal, how your organization's profit is looking like. But the worst part is what you know. Whenever you accept a dealer's proposal, now will you produce baby Rose or baby Lily? Which one? No idea. Hey, will produce which gives you more profit. No. Today while coming only she. You are going to choose one which gives more profit. Shall we determine? So here the limiting factor is what? Material. How do you know, sir? Check no. You have demand for 7,500 units. Yes. If you use 8 liters, how many liters of material is required? 60,000 M plus 6,000 into 10 M plus MRC. 120,000 liters of material required to satisfy whole order. However, you have material of only. Can I tell material is the key limiting factor here? Shall we start now? We got baby rose, baby lily. Selling price. People is offering us the same price what we are selling it to other customers. What is the rate to? 600? 750 minus variable cost. First one, material. How much it is? Huh? And done. Next is what? Other variable cost. First one. Second one. Also, packing cost will be there. 10. So the contribution per unit when you sell to new dealer is 160, 190. But can we take a call based on this? We have to decide on the basis of what? Contribution per key limiting factor. Here it is material per kg. Correct? Guys, 160 rupees you are earning when you are spending or when you are using 8 liters of material. Liter, no? Which means 20 rupees per liter. Next one, 190 when you are using 10 liters, 19 per liter. So which is the rank 1? No? Which is rank 2? Yes, sir. How many liters of material you are using for A? Eight liters, no? So 160 you are earning by using 8 liters, which means per liter 20. Then 10. Hope it is clear. Okay. Shall we? Now, how much ever we have extra. Hey, first find out how much extra we have. Material, unused material. We are producing 4,000 baby rose at the rate of, 8 liters are required, no? 32,000 liters, Okay. 3,000 baby lily, 10 liters, 30,000, 62,000 liters, which means extra is how much? Can we do like this? 38,000 divided by 8 liter. Because of our baby rose giving us 1 rupee extra, we are going to produce that everything? Nope. Why? Because your production capacity is restricted here. So max to max you can produce is 7,500, which means already you are producing 4,000, which means extra you can produce is, and each and every bottle will take 8 liters of material, which will come to 28,000 liters. But extra how much we had? 38,000 liter, which means in other 10,000 liters we are going to produce Baby Lily, to what extent? 1000 bottles. Hope you understood. So the new sales mix for us would be 7,500, no? 7,500 of Baby Rose, 4,000 bottles of Baby Lily. Got it? Now shall we find out for a whole organization? Baby Rose, Baby Lily, total. Sales. Guys, Baby Rose, how many units? 7,500 bottle. Baby Lily? Done. Guys, 7,500 into how much is per bottle? Baby Rose 600. How much?
45.
Baby Lily? Huh? Total sales. So, hope it is clear. Minus variable cost. First one, material. A, you give it to that guy or you give it to normal customer. End of the day, for that 7,500, 8 liters of material will be used, which is costing you 20 rupees, which will come to 12 lakh rupees. Correct? Hello? Next, 4,000 bottles you are preparing, each and everything take 10 liter, which means 40,000 liter at the rate of 20 rupees per liter, which will come to. So for the whole organization, material cost is piece. Got it? Okay. Second one is other variable cost too. How much it is? 277,500 into 270 people. 20,25,000. 4,000 into 350. 14 lakhs. 34 lakh 25. Hope it is clear. Also, one more major cost is there, that is packing cost. But remember one thing. Hey, remember here only and only extra packing cost they have given, which means normal packing cost they have already added in the other variable cost. In my example, which I told, 4 rupees, 10 rupees. In that scenario, 4 rupees you should have multiplied with the normal bottles. 10 rupees you should have multiplied with that customer's new bottles. Whereas here that doesn't matter. Normal bottle, anyhow it's already packed, which means extra cost we are incurring only for this 3,500 and 1,000. So in the first case, 3,500 into 10 now. 1,000 into 10 now. That will give you contribution. First one, how much people? 45 lakhs minus 12 lakhs minus 20 lakh 25,000 minus 35,000, 12 lakh 40,000. Next one, 30, 22, 8, 7 lakh 90, 20 lakh 30,000 minus fixed cost. Guys, how much is a fixed cost in first case? Piece. Second case, 4 lakh. Net. Got it? So that will give you profit. 7,40,000 3 lakh, 40,000, 10 lakh. Hope it is clear. Any doubts? Any doubts here? Peace? Understood? Simple. See, all these you have to practice once. Then only we'll get to know how nicely you are able to process this. Right now, whenever it's a cases, whenever I help you guys out, that moment you will like, yeah, understood, easy. When you sit and solve on your own, won't get to know from where to start. You should get out of that point. Once you are able to process that, once your skill increases to that extent, then any question you will be able to solve if you have the clarity of the concept. Got it? So make the habit or build that particular skills. Dhanashri K. Pay ASG College of Arts and Science joined as a guest. Two more questions are there. Shall we quickly see this? XYZ company has an option to buy one of the two machines N and M to manufacture its unique industrial component P. Each of the machine have the capacity to produce same quality of the component P and almost identical except for the fact that they are being manufactured by a different manufacturer. The specifications for each machine is as follows. Machine M has the capacity of 50,000 components where the fixed cost is 150,000. It could generate a profit of 2,25,000 on the sale of all the component, guys, which means per component how much it is able to generate. 2,25,000 divided by 50,000 rupees. Correct? However, can you tell me the contribution per unit here? Easy. How? You know the profit. Correct? You know the fixed cost. Which means your contribution should be 3,75,000. Hello? Your contribution should be 3,75,000 for 50,000 components. Which means in this case contribution per unit is rupees 7.5. Contribution per unit is 7.5. Hope it is clear. Shall we see the machine N? It also has the equal capacity, which means 50,000 units only. Good. Same number of component as machine M, and all the component produced could be sold in the open market without any difficulty. Awesome. Fixed cost of machine N is 60,000 less than machine M, which means machine M 1,50,000. This will be 90,000. Fixed cost will be 90,000 and it yields a profit of 1,60,000. Which means, can you tell me how much is the contribution by selling 50,000? 2,50,000. Yes or no? Then only if you reduce 90, we'll get 160. Okay. Per unit, 5 rupees. Contribution per unit, rupees 5. Selling price is 100. Awesome. What is so awesome in that, sir? You know the selling price here. You know the contribution. Variable cost will be 92.5. PV ratio will be PV ratio 7.5. In this case 5%. Yes or no? And variable cost will be how much? 95. Hope this data you guys able to process and understand. Calculate the break-even sales in value of each machine. So, machine M, machine N, fixed cost 1,50,000, 90,000. They are asking in value, so we need PV ratio, correct? M 7.5%, N 5%. How much should be your break-even point? Fixed cost divided by PV ratio. 1,50,000 divided by 7.5%. Very good. 20 lakhs. Next one. 18 lakhs for this 3 marks. Oh my god. Calculate the sales level in unit where both the machine are equally profitable. Moral of the story, they are asking about the indifference point. Indifference point, however, not cost indifference point, but the profit indifference point. Shall I take the indifference point as I? Okay. Contribution in first case is 7.5 I. Second case will be 5 I because same number of units minus fixed cost in first case is 150,000. Second case is 90,000. First one profit will be 7.5 I minus 150,000. Second one profit will be 5 I minus 90,000. But best part about indifference point we know is both the scenarios profit will be, which means 7.5I minus 150,000 is equal to 5I minus 90,000. Now 2.5I is equal to 60,000. I is equal to people 60,000 divided by 2.5, 24,000 units. If at all you are able to sell 24,000 units, you end up making same profit. Either you go for M, either you go for N. Got it? Shall we go for one last question? Yes, sir. Contribution from by selling indifference point units. Online people, shall we? Online? Yes. Listen here, question number 23. SW Limited manufactures linen bed covers. The present cost data are as below. Variable cost of manufacturing per unit is 200. Variable cost of selling and distribution per unit is 100. Fixed cost is 16 lakh. Selling price is 800. Expected profit for the company is 8 lakh. Guys, how much is the variable cost? Very good. 300. How much is the right now contribution? Smart. 500. Now, listen. The management could sense a stage of stagnation or deterioration, decreasing in future sales with the new entrant RK Enterprises. There is a new entrant coming into the market, because of which, of course, you are going to expect reduction in your sales. The SW Limited has approached to one marketing consulting firm for the study of CVP analysis. The firm suggested 3 alternatives to fuel the sales growth by tinkering with the selling price. Alternatives: reduce selling price percentage, people, percentage, projected increase in sales from the sales level that would generate 8 lakh rupees profit, which means, guys, First, let's find out how many units to be sold to get that 8 lakh profit. Contribution will be how much? Shall I take the units to be sold as 500x? Reduce 16 lakh from that as a fixed cost. That should give you profit of. Can I tell 24 lakh divided by 500? Right now we are planning for 4,800 where the selling price is 800. But our consulting firm is giving us few options. Option number 1, reduce selling price by 10%, which means it will become 720. So that your units will increase by 15%, which will become plus 15%. 5,520 units. Okay. Second option they are telling, boss, go for 12.5% decrease, not 12.5 rupees, 12.5%. Okay. New selling price will be 700. If you do so, from 4,800 it will go to 5,760 units of sale. Great. Next. 800 minus 15% will be your new selling price. 4,800 plus 25% will be your new sales units. Hope it's clear. ₹800 is current price minus 10% for first one, minus 12.5% for second one, minus 15% for third one. Now, what they are asking, calculate the effect on profit under each alternative. Right now we are planning for 8 lakh. No, they are asking how it will affect and recommend which alternative is most likely to be adopted by getting the maximum profit. Simple. Guys, if the selling price is 720, contribution per unit will be how much? We know that variable cost will be 300 only. Correct? So it will be 420. Second one, third one, piece. Now may I know the contribution we are going to make? 5420 into 420 in first case. Okay. 5760 into 400. 23 lakh. 4,000. Okay. 6,000 into 380 in third case. 22 lakh. 80,000. Now, we know that fixed cost is 8 lakh. Sorry, not 8 lakh. 16 lakh. So, the first one will give you profit of 7 lakh. 18,400. Second option will give you 7 lakh 4,000. Third option will give you 6 lakh. Guys. Now, which one you are going to take? Of course, we know that our profit will be decreased because they are asking a effect. That one line also you should add. Profit will decrease from expected level. How much? First one, 81,600. Second one, 96,000. Third one, 1,20,000. Correct? And anyhow, can you avoid this? The answer is no. Then which one you are going to adopt? We are going to adopt first one. We are going to adopt first one. Is that clear? Peace. Okay. With that, we have completed marginal costing discussion also. RTPs anyhow tomorrow, day after tomorrow, you are peacefully sitting in home. No. Once try to solve it. Okay. PYPs, majority of the question. I hope you guys were able to solve. If at all, you go and sit in exam if this question comes in the examination. Correct? Okay. Because this is one of the important chapter. That's the reason. Fine.